Hello and welcome to the Sisters for Fitness Wellness Show. I'm Stephanie Gaines Bryant. We're talking taxes today, and our guest today is Constance Nwosu. She is with CN Accounting. Welcome.
Thank you.
And you are a CPA, Certified
Yes.
Public Accountant.
Yes, I am.
There's a lot of things as we go into tax season, a lot of questions people have, a lot of things we need to know. In off air, we even talked about people with tax phobias.
Yes.
So
Yes.
as we head into this tax season, there's some things people need to know.
That's correct, Stephanie, and thank you for having me on your show. I think the biggest thing that people need to know is the deadline, which this year is April 18th. So we get 3 extra days from our standard May 15th deadline. And for those individuals who need a little more time, you actually can extend now through October 17th, but the extension must be filed by the April 18th tax deadline.
So why do we get this little perk this year?
Well, we get the little perk because the 15th actually falls on a holiday, on a weekend, and then that Monday is a District of Columbia emancipated holiday. So the IRS recognizes that holiday, so it gives us a couple extra days to file our taxes.
Let's begin by talking about there also will be a delay in getting your refund. That's because of the Protecting Americans from Tax Hike Act?
That's correct, commonly known as the PATH Act. And what that does, it allows the IRS a little more time to look at tax returns from individuals that are filing for the Earned Income Tax Credit and the Additional Child Tax Credit. The IRS, in its effort to help reduce fraud in tax return, it's allowing, under that act, a little more time to process and look at those returns to ensure that the taxpayers that are filing for those credits are indeed the taxpayers that are due those credits. And this is not unlike what other states are currently doing. We have some states that are now requiring those individuals that e-file their tax returns to put in state issued ID tax numbers to identify them in the system, again, to help reduce the amount of fraud in the tax preparation and tax reporting.
So it sounds like that has been a huge problem. We know that identity theft, period, has been a huge problem in this country, but it sounds like it's been a big problem when it comes to the IRS as well.
It has been. A few years ago, the IRS started issuing to taxpayers that have had their ID stolen a PIN, personal identification number. That PIN must be submitted with your e-file for any individual who's had their tax ID stolen, and each year you get a new PIN. So if you want to e-file, and if you're one of the taxpayers that have been given a PIN in the past, you must receive a new PIN each year in order to e-file. Otherwise, you have to submit your taxes the old-fashioned way, drop it in the mail, and wait for the IRS to process the return.
So you can't use the number for the year before?
That's correct. Each year you get a new number, and it's important that you wait for that new number before you e-file or you try to e-file. And if you've not received your PIN by this time, you should contact the IRS and see where that PIN is.
And are we seeing a delay of weeks when it comes to receiving your return, or is it days? What can we anticipate?
Well, the IRS started issuing the refunds for those tax returns that were being held on February the 27th. Now, you were able to file ahead of time, but you had to wait until February the 27th. And I have a feeling that some of those returns are still being processed. And remember, not everyone filed early. So as you're filing now, and if you're filing for that Earned Income Tax Credit or the Additional Child Tax Credit, just know that your return will be delayed because the IRS is going to ensure that you are entitled to that refund.
You know, my husband and I, there's a big difference in our personality when it comes to, I like to file early. I like to get it over with. So, but with our joint return, he likes to wait till the last minute. Do you find that I just want to get it out of the way? Soon as I get with my business and with my nonprofit, I file early.
Yeah.
With him, so do you find this conflict happening?
Well, I do. I have some clients that, by February the 3rd, the 5th, I have their tax information because they want to file, they want to get it out of the way, they want to see what refunds they're entitled to because they have plans for the refunds. I also have clients that will come to me, April 14th, and they're ready to file. So it all depends on your personality. I think a lot of people, they need more time to gather their information. They want to make sure they have all of the documentation. And for some people, as we said earlier, it is a phobia. Some individuals get really stressed out when it's time to file their taxes. But just know it's something that you have to do. You can't avoid paying taxes. And even if you don't owe any taxes, you're still required to file.
To fill out the paperwork, you still have to do it.
Yes, you still have to do it regardless of whether you're an individual or a business, regardless of whether or not you file the easy form or the more complex 1040, you're still required to file. And if you don't file and you owe taxes, then you're hit with penalties and interest on the amount that you were supposed to pay. And one of the most common penalties is the penalty for late filing because you did not file by the required deadline. So again, if you're not ready to file by April 18th, I would suggest that you file for an extension to give yourself a little bit more time. You get 6 more months to get your paperwork together and to file. However, if you owe, you're still required to pay what you owe by April 18th.
Can you repeat that, please?
You have to pay by April 18th.
So let's talk about the standard deductions for head of households has jumped $50?
Yeah, $50, yes. That was the only class where we saw an increase in the standard deduction. And head of household, as you know, are for those filers that maintain a home for, their children, they're unmarried, or they may be separated, and that's their filing class. So this year for 2016, they got an additional $50. The other standard deduction classes stayed the same. Single and married filing separately, $6,300. If you're married filing jointly, $12,600 is your standard deduction.
Let's talk about health care reforms now. How is that affecting your taxes?
Well, you're still required to certify on your tax return that you have health insurance. And you have health insurance either through your employer or you've gone out and purchased it on the open market under the Affordable Care Act. They will provide you with a statement, and you're to give that statement to your tax preparer, or if you're preparing your taxes yourself, there's certain information that you have to include on that on your tax return, especially if you've purchased your health insurance through the market, because you may be entitled to a credit, and the IRS needs to know how much you actually paid when you purchase your insurance over the market. If you receive your health insurance through your employer, it's really just a certification checking off a box. Yes, I have employer-provided health insurance, but still your employer will send you out a Form 1095 that you'll use to certify this information.
Okay, what if you haven't done what you need to do as far as insurance goes and you have to pay a penalty?
Right. Now, depending on your income level, you may be exempt from paying that penalty. But again, you still have to certify that I did not have health insurance either because I could not afford it. The IRS may still hit you with a penalty if you don't certify that you have health insurance.
Have you seen so far, because we've had this for a couple of years now.
Yes.
Have you seen so far many folks having to pay this penalty?
I've had a few clients that have had to pay the penalty because they did not have health insurance. They were self-employed. They did not, purchase insurance through the marketplace, and yes, they were penalized. So it is a real penalty.
Some reports have been or some things have been reported recently about the fact that, just like many other agencies in the government, the IRS is having some budget cut issues and will not be doing as many audits as they've done in the past. So we don't want people to get too comfortable.
That's correct.
I'm not going to get audited.
You don't want to take that chance.
Yeah, they're short-staffed. But they're still doing their job.
Yeah, the IRS is still doing their job, and they will still do their job. I often tell my clients that, the IRS knows how much you've made, and you're only filing taxes to report and to take what deductions that you are entitled to. And they know what you've made because your employer has had to report to them a copy of your W-2. They do quarterly reporting on 941s. If you're self-employed, and you work for companies where you're not an employee, but you've done work, they will issue you a 1099, and that 1099 has to go to the IRS. If you're receiving rent payment, you'll get a 1099, a copy has to go to the IRS. The IRS knows, your income, and again, you're only filing to show what deductions you have against the income you've made. Okay, so don't get too comfortable thinking that the IRS is not going to be, out auditing, looking at tax returns. They will definitely be doing that.
Now, of course, we talked about the fact that there's going to be a delay. Tax day is now April 18th, and you went over the fact that if you need to, you can put a delay.
That's correct.
Or you can
file an extension.
File an extension.
Yes.
But let's talk about some of the tips and what you should be looking for this year. What about maximizing your retirement contribution?
That is a big one, and that's a big tax savings. Each year, the amount that you can put away in your retirement, especially if you're an employer, goes up. I always advise my clients, if you're able to put the maximum aside, one, because it's helping to reduce the amount of wages that is taxable. Two, you're saving for retirement, and that income is not taxed until you pull it out. And if you have a family emergency or whatever, you can still pull it out. You'll pay a small penalty, but up front the income is not taxed. So to the extent that you're able to financially to max out your retirement, I would say do that. You can also,
some people, it's like they just think about today.
Yes. Yeah. And tomorrow comes also. Quickly, yes. And we are in a society where we need more to live off once we retire. When you retire, your income may be lower, so you're in a lower tax bracket. And how great is it to pay taxes on those funds that you've been saving at a lower tax bracket than it is now? So to the extent that you can put money in a retirement, I suggest you do that. Also, if you're not an employer, you can still contribute through an individual retirement account. And the beauty about that is you can wait until April 18th to fund that IRA. So when you purchase an IRA, you have until the tax deadline to fund that IRA, and you still get that tax deduction on that current year tax return. So yes, please invest in retirement. To the extent you need to consult a certified financial planner to help you through that whole process, do it.
How often should you adjust your withholdings? Is that something you should think about on a yearly basis? Is it something, if you're a long-time employee, is that something you should think about every 5 years? When should you think about that, and what should that adjustment be? Do you need professional advice for that?
I think you should look at your withholding on a yearly basis. January 1st of the new year is the perfect time. One, because you've just completed, the prior year. That year's over. It's a great opportunity to look at whether or not you need more money, more take-home money, or if you want to save towards, a big project, you may want to get more in a tax refund. Even if you're a long-time employer, look at your withholding. You get your pay stub each pay period, and it has the amount of taxes. Consult. I always tell my clients, come back in 6 months. Let's look at where you are on your income. Maybe we can adjust your withholding so you get a little bit more in your paycheck, to live off. Maybe, we look at the fact that you may need to pay a little more because your income have gone up. The biggest way that you can pay your payroll, your taxes, is through the payroll, so take a look at it.
Yeah, so that is something that you should assess on a regular basis.
Yeah.
What about making sure that you claim the valuables or the things that you can possibly claim? All the things you should claim should be claimed.
Yes, on your tax return. Yes. Look at your charitable contributions, which you've given during the year, to charitable organizations. It cannot be family members. It cannot be political organizations. It must be IRS deemed charitable organizations.
So in other words, you can't say I gave to my cousin.
You cannot tell the IRS that.
So he's a charity case.
Unfortunately, you cannot get a write-off for that. If you donate used clothing, household goods, furniture, your old car, those are all things that you can perhaps get a deduction for. There may be 1 or 2 additional forms that you have to complete, but yes, when you sit down to do your taxes, look at the entire year. Everything that you've done, not just the money you've made, but look at what you've given away to charity, because oftentimes those small amounts can actually make the difference between owing taxes and getting a refund or coming out at zero.
And what's the benefit of making sure you keep track of your receipts?
Cannot be expressed enough. Documentation. You want to keep every receipt that pertains to any deductions or income that you've made during the year. You do not want to get into a position where the IRS is questioning a deduction, a credit you've taken, and you do not have proper documentation to substantiate it. I advise my clients to get, a manila folder for each month, put the documentation in there. When I return to them their tax file it in a safe place. You have to keep it for at least 3 years after the due date of the return. Okay. So you keep it there. If there's a question that comes up, you go there, you give the IRS the documentation, the issue has been settled. Not having documentation causes you a lot of problems because the IRS, they don't know whether or not it's legitimate or not, and that's the easiest way to have an expense or a deduction disallowed by you not having proper documentation.
Are there any new regulations that we need to know about for the state of Maryland?
None really. The state of Maryland, one does not require you to input state issue ID information when you e-file as the other. So I've not seen a lot of changes with the state of Maryland. Again, your state taxes is going to flow from your federal taxes. Your adjusted gross income from your federal is what your states are going to start with. So ensuring that you've reported all of your income, all of your adjustments to your income on your federal will flow and help with your state tax return.
Anything that small business owners should know this year?
I think the main thing is to ensure that you document all of your expenses. You look at what income you've brought in. You want to do a Schedule C to look at what your net profit is. If you have a profit, then you're required to pay self-employment taxes, which is your portion of Social Security and Medicare. Also, as business owners, you are required to pay estimated taxes every quarter. So you want to make sure that you've paid what estimated taxes you were required to pay based on a calculation of your income. Some small business owners may want to take a home office deduction if they maintain an office in their home.
But there are some regulations with that.
There are some regulations. Most importantly being that you want to have a dedicated space where you are working. And whatever the square footage of that space is, you would be able to take that over your overall square footage, and that is the percentage that you would write off. It allows you to write off a portion of maintaining your home, such as your real estate taxes, your mortgage interest, if you had repairs and maintenance done to your house, your utilities, as well as for that particular space, you're able to write off 100% of, any repairs that you did to that area against your business income, thereby reducing your business income. So that's an expense that, if you're entitled to it, you should definitely look at taking, because it will help you to reduce your taxes.
Let's go back for a minute to filing personal taxes. A lot of people get into trouble when it comes to children. Mm-hmm. You've got a couple who's divorced.
Yes.
Who gets to file?
Yes.
Who gets to write off the children?
Yes. And
is that the right term? Not write off, but who gets
to deduct?
Deduct, I'm sorry,
yes.
Deduct the children.
Personal exemption, yes. So I always advise to ensure that there's an agreement between the parents as to which parent will take that child as a dependent for that tax year. Some clients will, 1 year the husband will do it, the next year the wife or the ex-wife will take the deduction. The important thing is the two parents cannot claim the child at the same time. The IRS was going to catch that, and they're going to disallow one parent. Normally, the deduction will go to the parents that have maintained a home for the child for the longer part of the tax year. But there should be an agreement between the parties.
So it's usually the person who has primary custody.
Right, primary custody.
But if they come to a different agreement, is that okay?
It is. It is okay, yes. As long as the two don't, take the child, that's fine.
What is considered a gift? Is there an allowance, a
yes.
specific amount?
There's a $25 gift allowance amount, which is what you can give any individual. So you'll see this with employers giving their employees a gift. The limit is $25.
Okay, and what's the maximum? Is there a maximum?
Well, the maximum that you can take a deduction for is the $25.
Okay.
So if you give a gift for $1,000, your allowance is only $25.
Don't spend a lot of
right. You're only going to get $25 deduction. Yes.
Let's talk about. We were joking. I said earlier in the program about people with phobias. So I want to really, in the last few minutes of the show, really address. You got to do it.
You have to do it. There's no way around filing your taxes. You may delay it for years and years, but pretty soon the IRS is going to come knocking at your door. So you may get away with it for a year or two, but again, they know what income you've made. I have clients who will come to me because they've neglected to file for whatever reason. The IRS has pull their return and have actually prepared a return for them and send them a nice little note. Here's what you owe us. And so they will come in an outrage because they don't know what to do. Once I get involved, I talk to the IRS, find out what the real issue is, then I can say to them, well, you haven't filed your taxes. Let's start there at least, getting the paperwork into the IRS so that we can really see what your liability is, because you may actually be due a refund. But at a minimum, you have to file.
And with that comes a lot of penalties for not filing. Yes. It causes more trouble.
It causes more trouble, more stress for you because you've not done what you were required to do, which was to file. And, failure to file penalty is one of the easiest penalties the IRS can hit you with because you've not filed the paperwork. And it will take some work for you to, work with the IRS to get those penalties resolved, to get that tax bill down. But, if you owe taxes, you don't have the money up front, you can always go on a payment plan with them.
Yeah, and like we were talking, people have so many phobias. If you just get it done, they do have plans. Yes. People think, oh, I've got to come out of my pocket with this big amount immediately.
Right.
But just work something out.
That's correct. Be proactive. Don't wait until the IRS notifies you. File your taxes, you see you owe them, contact them. And if you owe under $50,000 or less, you can actually go online and file for an installment agreement yourself. You don't need to talk to the IRS. As long as your tax liability is $50,000 or less, put yourself on a payment plan,
And again, for those people who didn't see the beginning of the program, the filing date for this year has changed.
Yes, it's now April 18th, so we get 3 extra days.
And that's because there's some sort of holiday, it's a federal holiday for the district. And also people need to be aware there may be some delays.
That's correct.
In your taxes this year because of?
Right, because of the PATH Act. And if you're filing for the Earned Income Tax Credit or the Additional Child Tax Credit, the IRS is taking a little longer to look at your tax return, thereby, delaying what refunds you may be entitled to.
And again, it's for our benefit because of the amount of tax fraud.
That's correct. It is for your benefit, yes. And, just protect your personal identity, your personal information, your social security number. Do whatever you can to keep that information safe and out of hands of folks that should not have your information.
And in wrapping up, also you mentioned that you need to hold on, which I didn't know. You need to hold on to those materials for at least 3 years.
3 years after the due date of the return. So the due date for this year is April 18th. So you would have to keep those returns for 3 years from April 18th.
Now, my husband, he would keep them for the next 50 years. So we're not a couple that has to worry about that. But for people who like to get rid of
stuff, you want to keep it for 3 years. You're required to.
And you should shred it when you do.
Yes, you should shred it and make sure that, if you go out to one of these shredding events, that you see that it's being shredded, because you don't want it getting in the hands of the wrong people.
Absolutely. Well, thank you so much. We've been talking to Constance Nwosu. She's with CN Accounting, and she's a certified public accountant. We've been talking about tax day. It'll be here before you know it. Be prepared.
Be prepared, yes.
Thank you so much for joining us today. You've been watching the Sisters for Fitness Wellness Show. I'm Stephanie Gaines Bryant. Have a great day.